In 2019, there are two main things an investor needs to consider. That is the fragility of the UK political system, which makes it even more important for investors to actually be tax efficient with their investments, and also to pay attention to charges, so to minimise your charges to maximise your future investment. From a tax point of view, that really means ISAs and pensions. It's true that many people view ISAs as being relatively mundane or pedestrian in terms of the tax benefits they offer, and over 1 year that is absolutely correct. But it is over the long term that ISAs really deliver significant benefits to investors. They provide an income which is free from any further tax, irrespective of your tax status, and they are also non-declarable. So the ability over a number of years or decades of investing to actually provide a non-declarable steady income is very much worth it in the long run. Pensions deliver even more upfront from the tax point of view. If you're a higher rate taxpayer, you actually only need to contribute £60 to get that topped up to £100 by HMRC. If you're a basic rate taxpayer, it's an £80 contribution to get the equivalent gross amount of £100. That already delivers a good rate of return on your money, but if you're in a situation where your actual employer can deliver matching contributions, that makes it even more compelling and a really good reason to invest in pensions. So effectively, what you're saying is that for £60 or £80, you are going to have £200 in your investment pension account before you even start investing. That sort of rate of return is pretty good for every investor. It's really surprising the difference charges can make to your long-term wealth. They can contribute tens of thousands of pounds in difference between you and another portfolio if you were to pay more charges. HMRC have calculated that the average ISA portfolio is £50,000 and the average contribution every year a little over £10,000. A 0.5% extra paid in charges over 30 years with an annual return of 5% would actually make over £50,000 worth of difference. So you have to work out whether you want that money or you want to pay it to your provider. People are well used to checking their broadband, telephone, utilities every year, but from the point of view of checking your investment provider and how much you're paying, that's far less regular thing to do. So if you do one thing this year, then I would recommend that you check how much you're paying to your underlying investment provider. It may be the best investment you make in 2019.